Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just wrapped up our second interview with Neil Twa, CEO and founder of Voltage Digital Media. Anthony, what was the takeaway you had?
Well, I think what was real, Neil just has a wealth of knowledge. And, you know, a lot of times what we're talking about on our podcast is creating that passive income to be more than the monthly expenses. And we talk a lot about real estate, which is a great way to do that. But if we're going long-term real estate, it's going to take a long time to create enough passive income for more than your monthly expenses. Another avenue is a business.
Yeah.
And now we had Neil on May 31st, which you might want to check out that episode. And he talked about teaching how to create your own store on Amazon. And then today he's talking about, well, there's people who want to sell their Amazon business. So this could be a way to get into the game faster and kind of where the business is already running. I mean, each avenue comes with some pros and cons, but just Neil was a wealth of knowledge on the advantage of each. What was your takeaway, Cam?
My takeaway is something that we've echoed on this podcast before is know what you're investing in. And one of the cautions that he kind of started this podcast with was, hey, there's some real opportunities, but one of the problems out there is that you don't want to go out there and acquire something without having a proper understanding of it. And I couldn't agree more with that takeaway is if you're going to do something along this line is there is going to be some sort of startup phase, right? If you don't have that education, you need to go find it. And so I appreciated kind of the way that he kind of framed this conversation that we have today. I think there's going to be a whole bunch of opportunities in this space. And if somebody has that interest or has that skill set that lines up, it could be very lucrative for them in the coming years.
What I think was cool about this episode was this is something I might have heard it existed, but I didn't even know that it does. And that's part of what we're trying to share with this podcast and with our listeners and clients of different ways of building passive income outside of Wall Street. And if you want to learn more about this or about infinite banking or other ways to create passive income, great way to start. We get on a discovery call with us, 15 to 30 minutes, discuss your goals, and then we can kind of figure out how and if we can help you.
Yep. As I mentioned, Neil, right? He's the founder and CEO of Voltage Digital Media. He's been launching, operating, and growing private e-commerce business for almost 10 years. He and his clients have sold over $100 million in physical products. So,
wow.
Yeah, we'll have his contact information in the show notes. Enjoy this episode.
Take care.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Neil, welcome back, man. We are excited to have you, and we're looking forward to today's topic. But before we dive into it, man, we just had you on recently. And before we get to today's topic, if you could maybe give us a little overview. Last time you talked to us about kind of building an online business. Take it from there.
Yeah, man. Thank you so much. So it was a fun episode. If we got the time correct, somewhere back in May, end of May, roughly, we had a great episode to talk about building e-commerce companies. Yeah. How to do it in a reasonable amount of time. How to stack the profits correctly in that business over expected results. And we talked about how to build a brand, and then we extrapolated into what is the business, what I call the platinum principle. The business behind the economics of e-com and, building something with the end in mind. So that business has an intrinsic value, it has worth, it has an exit potential. So we're not just building a side hustle for fun and for just profit. We're building a business that has intrinsic value that'll be worth more in the end when we sell it than any time during the business building phase. So we really went into that detail and helped kind of unpack that. And we'll probably try to do that a little bit more today and talk about what it means to sell that business. We'll call this the Ashley Madison side hustle business, as we were joking, how to get your little piece on the side with e-com. If you're too tired to do this or you're not inspired, this might not be the episode for you. But that's kind of the stuff we're going to dig in today, right?
No, that's a good way to start, Neil. Good way to start.
Good. Absolutely. So Neil, the reason that we've got you back so soon is because there's some opportunities that are presenting themselves kind of in this space. If you could, man, start us off there. Kind of give us the big overall view of what's really happening in your space and where these opportunities are coming about.
Yep. So for those who may not be familiar with the e-com space as much, maybe you're working a job, you're in a corporate thing, or maybe you're off in real estate investing or IBCs or playing around in the other markets or whatever. For the e-com world, the growth has been huge in the last 3-4 years due to the COVID bump and then due to the adoption requirement of online purchasing versus physically going to the stores. That has increased the mechanisms a lot by which people who would normally not get online are now getting online, got comfortable with the concept of delivery in 1 hour to 2 days with products, and sort of realized, wow, there's another world of opportunity that I really wasn't privy to. And I liked that convenience. And so it's got new growth projections that are showing new $1 trillion in opportunity in e-com and one of the fastest growing business models really out there for all kinds of reasons. The other aspect that you alluded to, Cameron, is changes in the market right now through, obviously capitulation of certain events that are occurring in our space or real estate or other events that are occurring that are allowing certain models to take opportunity and preference over others. And one of the big things you alluded to, I'll unpack a little here, was the SPAC-driven acquisition model that occurred in the last less than 30 months now. In which SPACs or special purpose acquisition companies were formed for investor capital, alternative to Wall Street investment strategies, in which they wanted to put buying dollars into e-com companies. And they went specifically after Amazon FBA business model. And they deployed somewhere around $12 to $15 billion in acquisitions to do that. One of the major hurdles they discovered as they placed people with great knowledge and degrees and other really cool acronyms into, was that they didn't know how to operate these. And so one of the major gotcha points that happened in the last 6 months is that they had to stop acquisitions because they couldn't keep the SPAC above a certain performance or profitability because they were acquiring too fast without understanding how to operate the business. And I have been consulting and stopped consulting most recently with a couple of companies who simply didn't want to listen to me anymore, which is fun. Because they didn't want me to tell them to give their capital back, because that was the end result. Either learn how to operate this company correctly or save yourself the embarrassment by simply giving the money back to your investors. So the end result is they didn't know how to purchase what they were doing. They bought some really dumb brands. They were going downhill very rapidly. And their answer was, well, we got more capital to spend, at which point I said, no, you probably don't. If you've got a fiduciary responsibility to your investors, you might want to rethink that. So what's going to happen is those products that are the businesses within those SPACs are going to be dumped. The CFO, I'm sure, behind the CEO direction to honor the agreement to their investors and their performance of those portfolios, are going to find a line across the bottom of the balance sheet and just dump what's on the bottom half. There are good products. There are good brands. They were acquired because they were profitable. Okay. The problem is the operators made them less profitable. So they fell below certain lines in the balance sheet. So they're going to end up on the market as a fire sale, which is presenting a new pipeline very quickly of small business opportunities, $25,000, $50,000 to a $5 million range that have a lot of upside potential and opportunity. They're just looking for the right operator to actually take advantage of that opportunity. So as we originally talked, and to wrap that around, we talked about building CEO operators, those who understand operations and capacity, but don't necessarily have the knowledge to properly execute the operations of an e-commerce company, which is one of the things we help train people through so that they become very astute in the financial and fiduciary responsibilities of managing one of these kinds of companies, especially if you haven't done it. So the gotcha, the pros and cons, and I'm sure we're going to go into this a little bit more, is understanding, well, if I just buy an e-com company because it's profitable now, doesn't necessarily mean in 6 months it's going to stay profitable if I don't know what I'm doing. And if I don't know what I'm doing and I hire someone else to take over management because I say I don't have the time, and they start to drive it into the ground, then what happens to the asset that I just had, right? I don't know how to recover it. I don't know how to replace the operator. I don't really know exactly what they were doing. And I may have split profits with them, so now it's even more hairy. You see where this? So there's some of these things we can dig into that I'm sure are on the minds of anybody who might be considering starting or buying one of these kinds of business models.
Who do you think is going to be considering buying these? Is there somebody with a certain skill set or a background that this might be better suited for?
Well, I mean, we're looking at acquiring them because we have the operator experience and knowledge to run one of these on scale. Others are looking at it as potentially passive income. Now, define passive because this word gets tossed around so much. What I would refer to it closer as almost automated income. So if I run something for 10 to 15 hours a week and it's tossing off 10 to 100,000 a month in profit, I consider that to be pretty almost automated income. But I have to understand in that 10 hours what, I'm actually doing to impact revenue, what we call RGAs, or revenue generating activities that I'm actually doing to maintain or gain on the investment and the type I'm doing, which means you have to kind of understand the whole model. And if you're not really comfortable with it, you have some very detrimental strengths and weaknesses you're not identifying correctly. So those who want to acquire this must first acquire the knowledge. You can't just simply acquire the business.
Okay, so how do we acquire the knowledge?
Well, hopefully this podcast is giving you some of that, giving you some insights, okay, as to where your boundaries might be. I know it sounds really cool to own an e-commerce company, and it is when you know what you're doing, and it tosses off very good profit. I mean, we're earning more in our physical asset-driven e-commerce companies than I would ever put money into Wall Street for on continuous earns that I have more control and management over than just dumping it into to Wall Street. I have the ability to return 10 to 15% profit on my money every year, and can even increase that or take it back faster by exiting certain brands. And I have the control mechanisms to do that, as opposed to handing it to a fund manager or some sort of investment account that does that. So I'm not privy to that, and I'll be transparent. I'm not in the Wall Street game, right? I have none of those assets and no 401ks. All of my money is wrapped in physical products and asset-driven business models. So to gain that knowledge, first is to accept the differences in that investment strategy, right? First up, I have to know that I got the chops for it. I got to know that I'm willing to learn, and this is something I'm really actually wanting to do, and not just because it's cool. It might be a fad, or I can tell people I have an online business, because that quickly could change to an online dumpster fire. So what you want to make sure you understand is the fundamentals of business, of e-com. All right. And we can oversimplify that at times by saying simple things like, well, you create a brand and you put products in it and you sell it to people. Okay, great. That's really, that's really simple. I got it. But what do I sell? Like, what the heck do I actually sell somebody that makes money? And suddenly things get a little more dependent, a little more complex, and a little bit more ambiguous if you don't understand. So the first knowledge acquisition is understanding the fundamentals of management and making money in the business model. Second is understanding the product or product-driven business cycle of an e-commerce company. And third, it's understanding the value of those things to the person that you're selling to the avatar, the consumer of that product. You get those three things right, and the mechanics can be taught to assistants. I have no employees. I have people with SOPs and OKRs that do the activities of my business. That gives me a lifestyle-driven business, right? Not a business that drives my lifestyle. There's probably a few people who have great lifestyles because of the business they work for, or the business that they created that gives them that lifestyle. The difference is that freedom of time, the freedom of activity that a lifestyle-driven business gives you, in which you apply the business fundamentals to the lifestyle you want to grow, and keep the business in control so the lifestyle does not subject itself to that. Does that make sense?
Yeah, absolutely. So we acquire the knowledge. Is it just inherent once you acquire the knowledge that you're able to kind of identify a good opportunity of buying that business? What's secondary to that?
Well, I mean, of course, you have to understand the fundamentals of the growth and the upside potential, operational independence of the e-commerce business life cycle, because it gives me the ability from a one-person shop in the middle of 40 acres and nowhere with squirrel-powered internet to reach millions of people with my products. Okay. And I leverage the Amazon FBA system as a tool. I'm willing to pay for that tool. And others will argue, what's too expensive? Well, too expensive is one man's luxury and another man's poverty. So at the end, the aspect of that is the recognition of a tool that I'm using called Amazon to incubate products and brands and determine their worth. Or if it's a product brand driven line I'm going to purchase, I want to understand that this tool has more upside potential in the market than the current purchase price of that product. Which is the business. Okay. So the end result is understanding the market or opportunity of that brand, which means you also have to understand the market or upside potential of Amazon's marketplace first, not just simply say, well, if I take that brand and buy it, I can just simply move it into the great wide world of marketing and online. That's actually not necessarily true. Some brands and products in Amazon are channel locked. Meaning that they only have the distribution capable within Amazon, but if you took them to the direct to consumer world, they're not going to be profitable. So understanding what makes a great profitable brand on Amazon and which actual products drive that consumer, but also can move into multiple channels beyond Amazon while still maintaining profitability and reaching your target avatar audience. And so there are aspects of the nuances of this, that knowledge in a full immersion event, what I call learn and earn, teach you how to do that. Takes it from transitory to intrinsic knowledge, and then into tacit knowledge that you can actually replicate, teach, and learn other people how to do. And that is a full process of immersing yourself in the activities of actually doing it. From there, it becomes a lot easier to see it. It's like driving a car, right? Yeah. It's one, that's how we teach our children to drive cars, and hopefully they don't kill us in the process of learning, right?
That is so stressful, teaching kids to drive.
Really. Here's what I did. I stuck my 12-year-old in a 2500 Dodge Ram truck that she can play bumper trees with.
Nice.
And we set her out on the country roads and taught her how to drive. And 2 years later, she's driving back and forth to the trash every week as part of her activities and down around the holler, because she can drive just fine.
Oh, you guys got a holler?
We got lots of hollers out here in the country. Now, I got countryisms up the yin yang.
Yeah.
Now, Neil,
Yes.
honestly, that makes total sense. Before you kind of dive into this, you need to understand and learn the business. And as amazing as this podcast episode is going to be, this isn't going to be enough.
Nope.
I would imagine, for them to learn. So how does somebody go about learning this?
Well, in any situation, if you truly understand it's an opportunity and you truly want to take advantage of that, and you feel inspired, like we talked about a minute ago, and maybe your job is no longer inspiring you, but you're inspired to go try something different. And the time isn't really as of the issue as we all say, because we'll put time into whatever matters to us most. Time is just an excuse everybody uses. At the same time, you both know you can't buy more of it. So let's be very purposeful with it. We can't buy it back. I can buy back anything else. The end result is understanding that if you need to do this, you should find a mentor or an apprenticeship role in which you can learn how to do this. This is not a traditional institutional knowledge. You should understand that very clearly. If you go through business or marketing or online marketing classes in the traditional institutional world, you will have been behind by 4 years. Things change so fast, sometimes weekly, in this model of business, that anything being taught now has to be re-updated next week. So you need somebody who is in a constant mode of doing the business model, who is constantly updating you as to where to go. And hopefully they're doing it 10 times bigger than you think is possible for you. So you have an opportunity to see them cut the trees first in the forest so you can walk in behind them. And it's very important you understand that, because you can go and say, I want to be an electrician, as an example. And just because you put two wires together and the light comes on doesn't mean you can call yourself an electrician. What you're going to need to do is go out an apprenticeship, right? You're going to need to get certified. You're going to need to be licensed. And then you're going to be able to go out in the world and say, I'm a licensed and bonded electrician, and I can actually work on your house without burning it down, right? So we have to understand, in e-com, there are no licenses and tracks and certifications to follow, but there are processes and plans to potentially apprentice yourself in a mentor or advisor relationship that will show you those guardrails and boundaries as you go up the hill. It's very important to realize how fast you can take and deploy capital in the wrong direction when you don't know what you're doing, and waste so many more hours trying to figure it out on your own and learning from very, hard knock life rules to do that. I'm one of them. I dropped out of college in my third year, right? And I learned how to bang my head and get bloody by learning all the wrong things I shouldn't be doing and all the things I shouldn't do and all the things I didn't want to do. And I learned very well how to do all of those things badly. And so because of that, I now understand what it is I want to do, and I've understood what I'm actually good at, and I stay in my lane. And if you don't understand those guardrails just yet, because you're living in someone else's, which means you may be driving a corporate car, you may be living in a corporate environment, you may be doing someone else's business in their guardrails, and that feels really comfortable. But once you take off those guardrails, if someone else is not there to help put you back in line, you're going to drive off a cliff. It's just inevitable.
Now, I got a question for you, Neil. You just wait. Neil, is
one at a time, gentlemen.
Yeah, what I'm hearing is there's a lot of opportunity there for businesses to potentially purchase. What's the expectation if somebody wants to do this? Is this something that somebody can do on the side, or is this something where somebody's got to be in this thing full time? Because the knowledge you just covered, I don't think a lot of people have, right? So they've got to go learn it first.
You need to learn some of that, yeah.
Maybe clarify that for us.
Well, okay, it depends upon what you want to deploy and what makes sense. It may make sense for you to deploy into a learning mechanism, a launch process, a startup process, a learn and earn full immersion apprenticeship where you go out and learn how to do these things on your own and have some success for it and in it and build it yourself, at which point now going to acquire something is not hard at all, because now you know what to look for, you know the numbers, you understand the mechanisms and the mechanics. When someone says this is a really great business and it has $1 billion upside potential, and you look at it and go, I'd offer you $10 for that. You actually know why the value is being not perceived. And so if you're looking to buy this, yes, you can do this. We teach people in 10 to 15 hours a week how to do this, even when they reach 7 or multi-7 figures, because again, it's the revenue generating activities and the critical aspects that you should focus on, and not all this other nonsense, that actually make the most amount of money and output in your business. And it's typically a lot of mindset driven activities, because you could teach the mechanics to somebody else. You just need to understand the business, right? And the making of that money, and then the right people to actually execute some of those things now that you yourself know what it is they should be executing. I always reference Undercover Boss, right? Have you guys ever watched that show?
Yeah, love that show.
The CEO somehow managed to forget exactly how his entire organization runs, and then he gets to drop to the lowest level of it and figure out he doesn't know shit about anything, right? and that's where you need to not be in that position, okay?
Sometimes I feel Cameron comes in as an undercover boss. But anyways, but
what are we doing?
He won't wear a wig though. He ain't gonna mess up that hair.
Right. This week is not Cameron, it's Camarilla. Welcome to the show, Camarilla. Yeah. Put lipstick on that pig and it still stinks. But yeah, so you have to learn that. If you could do it on the side, yes, you could buy something. You know, if you got cash you want to deploy and you don't want it just sitting in your account, losing money in inflation or transitory assets, and you don't necessarily want to put it in the stock market like me, or you're hesitant to put it in those other places, you can put it in a physical business with physical assets with a virtual real estate front on it, you know, called the online world, but still physical assets and inventory that you're buying into, right? Not 100% just vaporware. It actually has a physical inventory level to it. So I know my cash is going into that, right?
You just mentioned cash. How much does somebody need, and what's the price tag on some of these businesses? I think
sure.
25,000 to 5 million.
Yeah, roughly, just depending upon the profitability. If it's Amazon only channel and they're at least 15% net profit, okay, returning net profit back at least 15% in the year, meaning if they are $1 million business, they've got a minimum of 150,000 in profit return to that business minimum. Then you're looking at anywhere 3 to 4x at the exit. Okay, maybe a little bit lower. Based on amount of inventory that sells with the business, based on upside potential of the products, and based upon time, energy, and management required to sort of take on that business. The other thing is, of course, revenues don't make a whole lot of sense in this instance. It's really about what the profit potential and profitability of those products are. If I look at somebody doing 7 figures and they're asking multiples of 150,000 in profit, I want to know that in a reasonable amount of time, I can turn that 150 into 300,000. So I need to know the products are not only just profitable, but they're missing some very key opportunities and logistics and in internal management running of the paid traffic campaigns inside of Amazon, or they're just simply missing avatar opportunities in their brand and their product that we can quickly shift into higher profitability or valuations. Those are the things that I'm going to consider. Including how they're running the business and structure their operational independence. If it's a one-man shop, do you have any people, SOPs or whatnot, supporting it? Do you have any employees? I'm going to ask some questions around the business, but the price points of those could be anywhere between 100K for the business, okay, in its total, multiples, up to 10 million. In terms of the sweet spots for getting going, it's going to be dependent upon your cash and what you want to return as money every year as an ROI of your cash investment. So if by comparison, you're going to spend maybe 100K in year one to start a business, start a brand that could return 10 to 50,000 a month in profit or more, or you're going to buy a business that may have 10,000 in profit and it's going to cost you, anywhere to $300,000 to $500,000, but you don't have a lot of work in it. It's more of that mailbox money kind of idea, or that almost automated income. But you also know enough to be dangerous in purchasing it, so you're not too concerned you can't maintain it, all things considered. But there are all kinds of variables to that. Just as a higher or a different, most recent example, we were putting in on a business that did not have an Amazon channel. We were going to open the Amazon channel as the opportunity. It's about a $2.2 million cash deal. They got owner financing and equity kind of financing on the table for a couple of buyers that had them around 2.7 to 3.5 based on the owner financing deal. That's about 2.6 at the low end on the 2.2 in cash. It was about 2.6 times return based on about 870,000 in profit that he had. So that was a reasonable ask. In fact, it was a little under market value. However, if you've never run paid search, understood vendor relationships, or understood the technicals of running a website and front end direct to consumer channel, that almost automated income could almost automatically be guaranteed to drop in the next 12 months. If now at its current run rate from last year, this particular example was up 45%. So its market penetration had reached in its 9-year history a big capitulation moment where it literally took over some of the additional market share and gone up 45% in the last year alone, just by staying in the market and serving the market and its purpose. For us, the deal is going to fall through, which is fine, and I hope they find a great buyer. But our intent was to basically buy it and then turn around in less than 12 months and flip it for $3.7 million, because that is his actual market validation. So we wouldn't have to change too much of the business and operations to make that a great opportunity.
Now, when you're buying this, who's the operator, or do you hire an operator? Are you the operator, or?
Voltage was going to be the operator in that instance. And we have operational staff that was as well capable of managing that channel, opening the Amazon channel, and increasing the value of the business. That was part of the buying structure that we were working out.
You mentioned financing. Is there owner financing in this scenario? Is there financing in this space?
There absolutely is. If there is, everybody wants to go the traditional SBA route, which takes a long time, and certain business models simply won't apply, especially because they're a little hesitant to the online world. They're not extremely smart in that. That's been my experience. No offense, SBA. But at the end of the day, traditional business for them is a little bit more comfortable, and they'll typically fast track SBA-based businesses in the more, I'm going to call it the real world, what's the real world? In the traditional business spaces of you buying like a pharmacy or buying a local business shop or something. When it comes to the online world, it's a little bit different for them, and they don't usually fast track those kinds or make it easier. So there's other capital opportunities to go out. There's a lot of capital. I know it doesn't always feel like that for everybody, but there's quite a bit of groups, home offices, hedge funds, other investment groups that are flush with capital that don't want to put it into markets. And right now they're holding back maybe on real estate, but they want to put that to work. So there is a lot of capital. We help people kind of find some of those capital options within our group, so they have opportunities to build or grow or acquire certain businesses, but they'll need to be capitalized, no doubt about it. And owner financing is just as a mechanism of the seller tool that you can get potentially owners to agree. In this instance, let's say a 1.2 or 1 million cash up, the 1.2 million for your cash, we're going to pay it out over 3 years. You're going to stay as an operator for year 1 or 2 or whatever we negotiate and agree on, and we're going to pay you monthly on an agreeable amount that pays out the additional monies over 2 or 3 years, and the owner basically finances that and gets paid out monthly after they get their initial cash buy-in, right? So a lot of times some of the operators like that because they want to see the business grow. They've been doing it for a long time. They're emotionally connected to it. They really want to see that upside potential, and they just couldn't get to it money-wise, finance, emotional-wise. They were stuck and couldn't reach it. And someone coming in with fresh eyes and more money and stuff can help unlock some of the next tiers of opportunity. A lot of times operators are just like, hey, give me the cash. I'm out. I'm done. I've been doing this for years. I got other things to focus on. I'm bored. I want to spend time with my family. I got other businesses I want to put that money into. And so they're just like, get me out of here in 30 days, right? I'm out. And so it's just a variable of those differences, but there's opportunities to create creative financing on any business deal, which is kind of fun.
Now we are starting to stream our podcast live on YouTube and Facebook, so people can feel free to ask questions.
Awesome.
We do have one question from Josh, and he said, what's the pros and cons of buying the business versus building a business?
So just to hammer that back a little bit to a point I made earlier, the difference between buying and building is going to be knowledge. At the end of the day, I might buy a cash flow positive, profitable business and not have the knowledge to maintain it or grow it. Whereas I might build a company, gain the knowledge and intrinsic value, understand and have success in that, and then be capable of doing both. So the difference is really going to be down to you as a choice. What I choose to do is I've chosen to learn the model, become very good at it, and then have gone out and purchased other companies, acquired, merged, and helped my clients do the same from that experience. So Josh, it's not really one or the other. Just understand there's pros and cons and strengths and weaknesses. If you know a trusted operator, someone you know who is very good at that space of operations, and you would rather deploy your capital and kind of learn by proxy, knowing you can trust the operator to run it, then buying a business might be a faster way to profit. As long as the deal is correct and your operator and you have a reasonable understanding and expectations, if you've done deals before or you're very in a trusting position with that, that could be a really great win for you, right? It could also be a really dangerous use of your money if you are not understanding how the business is ran. Like, I wouldn't just go out and buy an electrician company. I bet I could drive that into the ground. Am I a dumb business guy? No. Do I understand the fundamentals of business? Absolutely. But by the time I gained that knowledge, I may have not necessarily helped the business like I thought I was going to.
Now, I've got a question for you, Neil. Is you're seeing these opportunities, right? Where would somebody go to see these opportunities? A broker? You guys get plugged into your network? How would somebody?
Yeah, all of the above, right? The brokers have it. The thing with the brokers though is, and I know some really good ones, and I know some really kind of questionable ones. The end result is a lot of times they have certain contracts, what's called a letter of intent, with the buyer who comes into the network a certain time in which they agree to sell the business, and that's part of the contract. The buyer has the opportunity to give to the seller at the time they agree to make it. And in essence, the brokers are acting like a temporary buyer and then giving people access to their network. Now, behind them is supposedly a lot of people who are interested in buying these companies. Well, sometimes in that LOI, it doesn't always happen in that time frame. And the LOI can last up to 90 days, and you're going to be locked into that while they determine who's going to buy that company. So just be aware of that. If you're someone who wants to buy a company and goes to a broker, their end result is they get paid a fee, and so they're going to be incentivized to find you somebody who's going to buy that business and do it at a rational thing. However, sometimes brokers structure deals that are not really in favor of the seller. They may lock you in a little bit too low. They may force you to take a little bit lower money and get locked into a longer term contract if you don't want that. So just be very careful if you approach them as someone wanting to buy a company, that you're very clear on the terms, how they structure their LOI with the seller, and what are the expectations of time and delivery of that business. If you have never done that before, it can be a little gotcha if you're not careful. There are plenty of those kinds of places out there. If you guys want to get connected to them or you want to learn what we're doing, you can go check it out at voltageb2b.com. Get through there, understand what we're doing, connect with me, and either my group or my connections into brokerages can show you the trusted ones you should actually work with, where there are a lot of these businesses in the pipeline right now that can kind of show you what's available.
Now, so Neil, give us an overview. It sounds like your company kind of does a lot in this space on different levels. You want to give us a little overview of how you guys help people?
Well, in its simplest terms, right? We launch, we grow, we scale, we either exit or acquire these companies. So if someone wants to learn how to do this, we teach them how to go out in 24 months, build a company, and then show them and help them exit that. Okay, we do it on what's called the first rights of refusal, meaning there's not a contractual obligation for them to sell their company or sell it through us. We do it on a gentleman's agreement that says if you work with us to help you launch and grow and build this company in 24 months, that you come to us first with the business opportunity to broker that relationship. And most likely you'll want to do that because we've been working together on a new startup. So we'll help people with the startup of the business. I set very realistic expectations of growth about how we can run these businesses and how fast we run in our results. So I usually don't want people to understand they're going to show up and think they do this on their time, because I know what can be done on our time. And so I want to make sure they come to run, right? Which means they come capitalized. They understand 50 to 100K in deployable capital in year one is a minimum for success in this marketplace. That they understand that results usually take 6 to 12 months to really see it ramp and grow. And then multiple channel opportunities will be available to do that. And that there's a path and a plan to repeat that process like we've done hundreds of times. They can come in and potentially acquire businesses. If it's already doing more than 50 to 100K a month and the business is available to be acquired, our account management team can step in if it's an Amazon only business channel and take over full management of that. As long as profits are above 15% net profit, above 50 to 100K in monthly revenues, we can put in a team that fully manages that and truly makes it almost automated income, as we will teach you and run the company at the same time and then help you exit it to the next level. So there are a couple different ways that we can approach people in this marketplace. I don't typically partner with people, definitely on a first time. I don't ask for ownership or equity in the company as a part of that process. I want to teach CEO operators to become independent. Okay. We coach and we mentor them to a place where we turn into advisors. I don't want them dependent on me. I want them to become excellent at what they do. That creates a longer term relationship, bigger pipeline. And as you guys understand wealth management like I do, it isn't the deals and the assets I control, it's the paper I control. And in this way, as I control the opportunities we go through, I create an upside potential for both of us. It's a win-win. I'm fully transparent that the money and the opportunities I'm presenting is the exit and acquiring of these businesses. It is not the coaching and mentoring. That's just a qualification level to ensure I'm working with the right people who have and understand this. And then we'll go deep, sometimes into years. Sometimes we'll do deals together. We'll co-broker, or they'll bring deals in, or we help them exit companies or provide companies they can buy. It becomes a longer term relationship in that way. And I just want to be very transparent with anybody listening. That's what's in it for me, right? So I only take a few people into the coaching because the rest of the business model and the actual business and the brands we are launching and the things we're doing are where my real money is made. But I take a few people along for the ride. So we do it at different stages of the ride.
Sounds cool.
Well said. Yeah. Where can, if somebody wants more information, where can they reach you at?
Yeah, as mentioned, go to voltageb2b.com, voltageb2b.com. Check out the presentation I did there. One of my partners in the portfolios division is Kevin Harrington, the Shark Tank guy, as seen on TV. Very good. This been about $5 billion in sales. Pretty good guy. And understands this model. We do a little quick presentation. It's not really quick. It's about 45 minutes. But we cover the basics of what's going on. And if you watch the whole thing, you'll understand much more in detail about that. And then you just reach out to me and say, hey, I'm interested, right? It's pretty nonchalant. I don't have a marketing team and it's not a sales pitch. It's an invite. If you qualify and I think you're a great fit and you agree and understand with what we're doing, then we might do some business together. You can also Google me. You can DuckDuckGo me or whatever favorite search engine. I have a little tiny name in case you haven't noticed. And I don't hide across the internet. I'm not trying to. You can go out and have your fun, decide if you like what I have to say, watch some podcasts, check out my Facebook feed. I warn you, my Facebook feed is where I have a lot of personal fun, poking at all kinds of world events. But you might find that resonates with your mind and maybe not, I don't know, but I'm pretty easy to find online. So you can go check that out.
Awesome, Neil. Thanks, man. Really appreciate it.
Thanks again, Neil. And go make it a fantastic day.
Take care.
Thanks for listening, and be sure to subscribe so you don't miss out on the next episode. Also, check out our website, infinitewealthconsultants.com, to find our podcast along with other additional resources.